So if you're watching this video, you're probably wondering, what the heck is this subject to financing in the title of this video? Now, I'm gonna break it down for you in this video. So subject to is a type of creative financing. You're not gonna see this type of financing being offered at a bank like a conventional loan, which is like a fixed rate or a variable rate mortgage. You're not gonna see it offered at a bank like that. As a homeowner, this is a type of financing that you can actually offer. And what it is basically when a buyer of your property takes over the existing mortgage on a home. So in this type of situation, the deed will actually be transferred to the new buyer. So you no longer will have the deed of the property. Who will be paying the mortgage? You actually will no longer be paying the mortgage, and the buyer will be paying the mortgage directly to the lender. It will be your actual loan. So in this scenario, when we're pretending that this is your loan, it will be your actual loan that the buyer is paying, but you are no longer making those payments, that buyer is. So you might be thinking, wait a second, this sounds way too good to be true. What is the catch here? I would say that there's not necessarily a catch, but there is one little thing that can technically happen. So with the transfer of the deed, the lender has the right to call the mortgage due. What does this mean? This means that they can basically ask that the remaining balance of the loan be paid up front. Gasp. You might be thinking, oh my God, that's horrible. Why would I ever want to do this to myself? Not so fast. This rarely ever happens. And if it does, in this subject to scenario, what you could do is have that buyer send a letter to the bank stating exactly that they're the ones paying the mortgage now and they're taking over the payments. And most of the time, banks then just don't even care and move on with banking like normal. So this rarely ever affects people. It's so uncommon that I almost didn't even want to talk about it in this video, but I'm always completely honest with you guys and I want to just give you all of the facts as much as I can. That's why I decided to mention it in this video, but it literally doesn't happen hardly ever. So that's why I really didn't even want to talk about it, because I didn't want to scare you. So why would you, as a seller, do this type of financing? Well, there's two big reasons. One big reason is if you're having a hard time selling your home and you're having a hard time attracting buyers, this is definitely a way to attract buyers, because there are a ton of homeowners who would not really think or know to even offer this to somebody. So second, I would say that if mortgage rates, like conventional mortgage rates at the time of you selling a home, is really high, then this could be an enticing way to get a whole new pool of buyers interested in your home, because you're offering this more attractive rate that you probably locked in many years ago. So at the time of me filming this video, mortgage rates are actually really high. And this is why subject to investing is working so well right now, because so many buyers are looking for ways to get these cheaper loans because the conventional mortgages are just so high right now. And also, with you being able to offer this lower monthly payment to these buyers, you're actually able to negotiate a higher purchase price, because a lot of times people don't really care about the overall purchase price. They really care more about what is their monthly payment going to look like. How many home buyers do you hear saying that? They care about what is their monthly expenses going to look like. That's literally all they care about nowadays. So you also might be thinking while watching this video, well, Lauren, what happens if I want to purchase another home after selling this one? So obviously this is a very common scenario, because most people need to go somewhere else after selling. So if you do want to purchase another home and you're worried about that existing loan showing up when you're trying to apply for a new mortgage, all you would have to do is have that buyer submit a letter, some type of proof to the lender saying that you are basically paying off that debt on the home. That is another very common scenario that happens all the time with this type of lending. So I hope this helped you understand this subject to type of real estate financing. And like I said, so many homeowners and even real estate agents just don't know about this type of financing, and it's just so powerful. So I always feel like it's my job to completely educate you on these type of things. Now, I would love to know, would you ever consider this type of financing, or would you be too scared to move forward on something like this? As always, I just love hearing from you guys.